In this week's Property Insider Chat, Dr. Andrew Wilson and I dive into the latest building approval figures. But we're not just looking at the numbers, we're going to unpack what these approvals mean in the context of Australia's worsening housing shortage and the government's ambitious pledge to get 1.2 million new homes built in the next 5 years. We're also going to look at our spending patterns and what that means, because that's a good economic indicator of how Australia is feeling, and the auction results for the second last auction weekend of the year. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so you can be updated each time a new show comes out. Are we making progress, or is the housing crisis set to deepen? That's what I want to discuss in this week's Property Insider Chat with Dr. Andrew Wilson, Chief Economist of My Housing Market and Australia's leading housing economist. Look, while the government set ambitious goals to deliver 1.2 million dwellings over the next 5 years, the latest building approval figures paint a complex picture of whether this target's going to be achieved. So I'm keen to hear Dr. Wilson's analysis of the data, explore what it means for the future housing supply, and discuss whether building approvals actually are going to align with demand. Look, with our rental markets tightening, migration still surging despite what the government said was going to happen, and construction costs still high, we'll look at some of the critical roadblocks and whether the government's housing plans are on track or just wishful thinking. Hello, Andrew.
Yeah, good day, Michael. And we're into December now, of course, so happy
Wow.
December.
Yes.
It's not long to go before we wind down, I suppose, but things are still, moving along in our housing markets as usual. And of course, the latest approvals data, we know it's almost a cliche that Australia has been suffering, along with a number of other advanced economies with a chronic undersupply of housing. That certainly continues to put upward pressure on prices and rents, and is a conundrum for governments. And, governments have been under pressure from the electorate in terms of, the disappointing numbers of new dwellings that have been coming through. And Australia's no exception to that. Maybe we're even in a worse position than many others, but certainly similar. And so that's why we focus, every month on the latest ABS building approval data, because it tells us if we're sort of making progress on the supply side to try to, provide Australians with the level of supply that they need to have a balanced housing market. So we have the latest data, which is the October data, and we had a rise up by 4.6% overall. These are building approvals, and that followed a 3% fall over September. But as we say every month, these figures are notoriously volatile, and they do reflect the ups and downs of the unit supply market.
Yes.
And again, we've seen that validation over October. Units were up a massive 24.8% over the month, mainly because of New South Wales and Sydney came through with some very big developments. And that's what happens. You can get on a month-to-month basis a big rise in units because of approvals of large developments, unit developments. That's what we've seen again this month in New South Wales and Sydney, and that follows a more settled previous month, September. So units are up 24.8%, but houses were down 5.2%. And approvals for houses, Michael, have been the bright point of our supply line over the past year. The number of houses approved for building have certainly risen consistently over the past year. But of course, and that's a good thing. But of course, what we really do need is more units, because units provide, a comparative, more significant, per unit, per dwelling measure. And that's what we need, particularly given units are obviously more of an inner middle ring suburb, inner city, inner suburban entity, and that's where the demand lies, in particularly for higher density unit living. And units are still down when we look at the longer term trends. But New South Wales top performer, up by 34.8% over the month, and as I said, that was because of a big rise in in unit developments in Sydney. When we look at the trends, Michael, for national building approvals for dwellings, for homes, and you mentioned that target, which I think is interesting, Michael, the government's target, which equates to around about 200,000 homes per year over that 6-year period. And if we look at where we've ended over what was a very positive month, October, and we annualize that, so let's multiply that by 12. We're still under the 200,000, just over 15,000 were approved over the month, and in the terms of trend, and that's as I said, it's still well below at tracking at around 180,000, the 200,000 target. And of course, Michael, we're talking approvals here, not completions. And we always see a drop off in the number of approvals versus the number of completions. So the point is, even though we're rising, particularly from houses, we're nowhere near the target that the government set, that 200,000 a year. And of course, if we don't meet it the first year, that just makes it even tougher the next year to be able to keep up with those aspirational targets. And when we look at the breakdown for units and houses, we can see the houses have steadily increased. The trend for the quarterly trend for houses has steadily increased, whereas units are still, that volatility is evident when we look at the monthly series in units, the ups and downs, as I described previously. But even though it's slightly up with a big month this month over October, we're not making any headway compared to the longer term trends. And as usual, when we break it down, our building approvals on a capital city basis, Melbourne well and truly ahead. Melbourne typically provides around about 40% of all home building approvals, and they're continuing to lead that charge, particularly for houses and units as well. But I think what the interesting comparisons are when we look at the capital city breakdowns is when we look at Perth. Perth is now approving only second to Melbourne in terms of the number of house approvals. And that just reflects how strong that Perth housing market is. Strong demand for housing is transferring itself into supply, which is good. But on the other end, Australia's largest capital city, Sydney, of course, is lagging behind not only Perth, but it's also lagging behind Brisbane in terms of the number of house approvals. So tough going in Sydney, which we know is a more, I guess we could say, advanced, has a more advanced metropolitan environment and less places to go in terms of particularly those greenfield developments. So but all systems go in Perth, and Melbourne continuing to lead the charge in terms of dwelling supply for approvals. When we look at the year-on-year comparisons, again, this is the year to date, so that's the first 10 months of this year versus same period last year. We can see that Perth is really roaring along in terms of its improvement. It has a smaller unit market, and that's why we see that big increase, 120% increase coming from a smaller base, but nonetheless, again, reflecting high demand for property in Perth is transferring into high supply. But Sydney not so strong, down for both houses and units, and of course the total when we look at those year-to-date comparisons. And it's Melbourne a positive there, but Brisbane, which is a concern because we know how strong demand is for units in Brisbane, and unit prices in Brisbane have skyrocketed over the last 2 years, but no sign of more supply coming through to meet what is very strong demand in that Brisbane unit market. The big picture here for the capital city supply line shows us just how far behind we are on the long-term trends. Still down on the annual trend, around 36% compared to the previous peak, which was way back in 2015-16. So even though we're rising and on the back of houses, we're still well behind, and that's the whole story in terms of the concerns we have in regard to undersupply. And when we break it down into houses and units over that long-term annual trend, We can see it's really units that have collapsed over the past 6 years. Units are down on the annual trend 58% since that peak way back in 2015. 16, and that's a massive fall. And but we can see on the trend basis that houses are certainly rising now. The annual trend of new houses being approved is rising, and if we discount that surge we had in 21, basis of that home builder policy from the previous government, we're approaching the previous high point, which was 2017, for the annual trend for house approval. So houses doing much better, Michael, but no joy still for units. So
Well, we know that's unlikely to change in the next little while because of construction costs, labour shortages, and it's not going to change until the gap between established units and new units is smaller, so that people are going to start buying new units, because new developments, apartment towers, have to be underpinned by pre-sales in general, to allow the banks to give finance for them. Having said that, last cycle it was overseas investors who are underpinning those big towers. That's not happening, and in fact local investors and home buyers are finding it too expensive at the moment too.
Yeah, and look, the whole point with unit development is that even if we started to see a consistent, sustained turnaround, which is, as you said, it's problematic, particularly given the constraints to planning, to planning outcomes. It would take years from that turnaround to actually be converted into, on the ground properties that could be lived in, and we are talking 2 to 3 years. So even if a revival happened, a significant revival happened, next year, it would take till 2027 for that to become a reality in the housing market and providing more options for buyers. So this is a long-term problem. As I mentioned, we're not alone here. Most advanced economies are struggling with this same problem, and as the government would be all too aware of, it's having political consequences, because people just are very unhappy if they can't, if they have limited access to dwellings, and as we've seen recently, it's having some political consequences. And you can set all the targets you like, but it's not the government that provides, that builds the houses. It's the private sector. So, and the constraints there are systemic. As you said, higher costs, planning restrictions, red tape, green tape, all those bits and pieces. You just can't fix those things overnight.
Well, turning to consumers at the moment, how they're feeling. We know that the cost of living pressures has affected a lot of families, but I know My Housing Market regularly looks at retail figures as well, just to see how people are feeling, how they're spending. We had the Black Friday sales, Christmas sales coming up, but it takes a while for these figures to come through. The latest retail data goes back to October, before the recent sales. What's happening? How are we feeling? What are we spending?
It's interesting, Michael. We do look at the retail sales because it gives us another correlating factor as to how the economy is performing, and of course how people are spending. Not just on how they're spending on housing, but also on their retail, on the retail sales environment. And that's really held up quite well in the higher interest rate environment. Which we would have thought would have dampened down demand for retail, but we really haven't seen that, and that does reflect the very strong economy that we have. Still low unemployment, just over 4%. Wages are still growing, although there was a downturn in the latest wages data, but that was more about the Commonwealth's wage decision. But obviously, there's still plenty of confidence in terms of spending in the economy. And we saw another good result over October, up 0.6% over the month. That followed a rise of just 0.1% over September. But the interesting thing, Michael, is last year we actually saw a bit of a dip over October in retail sales. And I think that was because people were waiting for, as you mentioned, the November Black Friday sales. We haven't seen that this year, where we had quite a significant rise in retail spending. So it'll be interesting to see if that increases again over November, as we would expect. as it did last year. And that's why we have that big change when we look at the year-on-year comparisons, up 3.4%, which is a massive change in the series compared to October last year. So whether it's, some working around of those November sales seasonal effects, we'll see when we get the November figures. But
Andrew, is it just that there's more of a spending and everything costs more?
And that's part of the story, Mike. I was just going to mention that. We have to take our retail figures in the context of two factors. The first is, as you mentioned, inflation is higher. And what this measures is the value of retail sales. So obviously, as inflation rises, that is an underlying growth factor for retail sales because prices are higher. So that means the value of retail sales are higher just because of inflation. So we need to discount for that. And also, there are more people spending now because we've had a surge in migration, Michael. So we're in a bit of a sort of a catch-up environment for that, with more people now in Australia spending. So when we look at those two factors, they are certainly inflating our retail sales, but not at the level that we're still seeing that we could say, well, it's not a strong retail market, because it still is, because we're tracking around about 40% higher still than the pre-COVID levels, So even though, yes, we can discount for inflation and for more people coming into Australia and spending, it's still a very positive environment for retail sales, but not as strong as perhaps we would have had without the inflation factor and also the migration factor.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. We're coming to the end of the year, the end of the auction period. Each week we discuss auctions because, again, as I always say, it gives us a good indication of how the market's feeling, buyers and sellers, what the mood is in time, rather than waiting for statistics to come through. Not surprisingly, people have made their buying decisions, their selling decisions, but still there was quite a bit of activity this weekend.
Yeah, well, as we saw last week, that we had positive results to end November, and we've now had a follow-up for that for December. Now, we've got to understand, Michael, we're at the end of the year. We've got one more weekend coming, so it was the penultimate weekend last weekend, or week last week. And again, we had steady clearance rates, even though numbers predictably fell away. And the previous week, where we ended November, we actually saw an increase in auction numbers, which is a little unusual once we start getting to the last couple of weeks of the year, the auction year. But they did fall away this week, and that's to be expected, because the market is certainly becoming distracted. But again, we've seen clearance rates overall standing up. And they're not too far away from where they were last year, Michael. So again, it's sort of, when we look at the big picture in terms of the Australian housing market, or capital city housing markets for 2024, they're not too far away, the results overall anyway, from what was recorded in 2023, which we know was a positive year. So again, yes, that's sort of reinforcing it. And I think these numbers are, given the seasonal factors, Michael, are again very positive for our market. When we look at the breakdowns, there was a big fall in the number of auctions in Sydney, also a big fall in the clearance rate. I think that Sydney market's become distracted, as we would expect this time of the year, below where it was a year ago at 66.9%. Also, listings were a little lower. And when we did the breakdown of the regional results in Sydney, Michael, we could see that it was the inner city markets that really fell away, particularly the lower North Shore had a low clearance rate. in fact, the lowest clearance rate of all the regions. And that those inner city higher priced or prestige markets in Sydney have been holding the market up quite significantly over the past month or so, but that's turned around, and we expect that to happen at this time of the year, and that's what's pushed that clearance rate down. Interesting enough, Melbourne also had a big falling away of listings over the week, ending December the 7th. But the week before that was a very big weekend for auction numbers. But the Melbourne market has really stood up, Michael. Yes, it's sort of underperformed compared to Sydney over the longer term, but its clearance rates have continued to track in the mid 60s, and it did so with a 64% clearance rate, which was basically the same as the week before. And it was actually higher than the year before, Michael. So the Melbourne market is finishing better than it ended last year. So I think there's some good positive signs there for Melbourne. Brisbane bounced back up with just under 50%, as we say every week. It's more of a typical auction market environment in Brisbane with around those 50% clearance rates, but still a strong market in terms of prices growth. But it has certainly has a different culture in terms of its auction marketing activities compared to the other capital city markets. So around about where it was a year ago for both listings and clearance rates. Adelaide's been the market that's really shifted downwards from being a boom auction market to more of a middling auction market. Again, 65% clearance rate in Adelaide, similar listing numbers, and similar to where it was a year ago, but well below where it was earlier this year. And the Canberra market bounced back with lower auction numbers, but a higher clearance rate, and around about where it was a year ago. So there's nothing really except for that, perhaps the regional differences in Sydney on a week-to-week basis to suggest that there's any shakeout in our auction markets, Michael. They're finishing the year, in what we would say in the context of the end of the year is a reasonably positive position, and particularly Melbourne, which is being supported by the budget and mid-priced market sections, the outer east, the northeast, and the west are continuing to attract buyers in that market, as they have for most of the year. But it is the prestige markets in Melbourne that have been struggling. But Melbourne's really continued to track, or Sydney has fallen away from its 70% plus clearance rates earlier in the season. But again, we can expect that with those seasonal effects and buyers becoming distracted, and what's been a very positive year for the Sydney market overall. So a lot of demand has been satisfied. Melbourne is actually tracking higher at the moment than it has for the last couple of months. Of course, we've got 1 week to go, but it's been very consistent, that Melbourne market, in the mid 60s. But as I said, it's still underperformed on the back of weaker sections of higher priced areas in Melbourne. Brisbane's picked up over December back to, as I mentioned, its normal type of energy, but well below earlier in 2024 when it was a boom time market, even with the auction results in Brisbane. Still a strong market in Brisbane. Adelaide, similar to Brisbane in a sense that it's fallen away from those high 70s, low 80% clearance rates that it was recording. So more of a normalised market in Adelaide. And Canberra bounced back over 60% so far over December for the first time in nearly 6 months. So if you want those auction clearance rates, the latest auction clearance rates are available on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, every Saturday around 6 to 6:30. And Michael publishes the full national report on Sundays, which includes the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales over the week under the hammer. So 1 week to go, Michael, and then it's all over till February. So that'll be interesting to see how we bounce back.
Well, looking back over the year, I think that despite all the challenges locally and overseas, the geopolitical problems, the remaining high interest rates, our property markets have remained remarkably resilient.
Yes.
And all those pessimistic forecasts about fixed rate cliffs, mortgage cliffs, unemployment, recessions haven't come to fruition. It'll be interesting how many people predict that next year.
Yes,
I guess
yes.
I'll make a prediction. Yes, the property pessimists will be out again next year again.
Well, this is their time of the year, Michael, because
Yes.
they can say whatever they like, and then month by month they can change their minds. But we've seen that for decades, haven't we? But sometimes they get it slightly right, but only slightly. And I don't think, particularly given there's still a lot of predictions for lower interest rates, which I don't particularly buy into, and I don't think the Reserve Bank does either. But if we did get lower interest rates, that'd only be a positive for the housing market. So
Definitely.
particularly some of those underperformers, such as Melbourne and Canberra, would be just the spark they would need, in my opinion. But
That's
I
what
think
they're
we can
waiting
look.
for.
Well, I think we can look forward to another reasonably positive year next year. And of course, we know that there's been some capital cities that have perhaps we could say overachieved, and we're talking about Perth, Adelaide, and Brisbane this year, and that's supported our markets. But onwards and upwards, and that's the whole point, that when we talk about the market, it is really a number of markets, not really the market. But as you said, it is that time of the year for the pessimists and the doomsayers and the clickbaiters to be out. So we can look forward to that, if I could say that ironically, over the next month or so.
So, some fun reading over Christmas. Okay, look forward to catching up with
Yes,
you for
thank you,
the last
Michael.
of this year's Property Insiders next week.
Thank you, Michael.